Good morning, traders. TGIF, welcome to your Friday show. Ryan, I don't think he's here, but anyway, from all people tuning into the Flow Show, happy birthday, Ryan. He has his 50th today. Life starts today for a man, and life starts at 50. Right, let's dig into everything that happened since we met last. So first of all, ECB, they did their 75 as expected, but then stopped short of what to do with the APP. No decision made. We saw a few comments later on saying that, and this morning, saying that they expect to discuss what's happening with QE, QT in the December meeting, discuss what's to happen. So that means to me that they won't probably make a decision to start it early 2024, but perhaps a little bit later. So all of that weighed a bit on they were not so clear or not so strict compared to what we could have expected in the teltros. They are still going to be remunerated at the base deposit rate, and Lagarde was trying very hard to not to take the word pivot in her mouth, but it seems clear that also what Villarroy told us later. Let me just kill my squawk. What told us later in this morning, saying that 75 BPs hikes is pretty exceptional, and they are not supposed to hike 75 on every meeting. So it was a hike. It was as expected, but a bit of a dovish one, we could say, compared to expectations or what they could have been saying. So the euro got a bit of a slap, on the not only versus the dollar, despite lower US rates, but also on the crosser side, euro was pretty much under the cosh, we can say, since then. Moving over, so the rest of the comments from those ECB bots, as I said, Simkus this morning said that they still need to raise. Villarroy says that normalization should be quick, but we must be careful with the QT, as already said. And Vasler expects further rate hikes, but was a bit vague on what should happen on QT as well. So it looks as if the doves have had a little bit of a victory. And yesterday as well, there was a sources pieces, but not from the usual sources, saying that ECB is not planning to set QT start date in December discussions. So that's, I reckon the hawks will come out soon saying that they would like, or they expect something to be discussed in more details in the December meeting. So all of this remains to be seen. Next, what did we have else? Yeah, we had a little bit better than expected US GDP, but despite that, we still saw yields falling yesterday towards, we broken through the 4% in the 10s and went down to 390. One and all may have to do with earnings season as well. There's a lot of earnings coming out. We saw Amazon warning on their future path. The big companies have been not completely falling apart, those earnings, but still they're all warning on what could be down the road. So I guess that had a little bit to do with the dollar weakness and the yields coming off yesterday as well. Okay, the rest, durable goods up and down. The prices index collapsed. So that may be a bit of a harbinger for what may come. I'm going to move on to today's dates later. Where am I? Over here. So yes, and the price component fell pretty sharply. Jobless claims creeping up on the 4-week average, but hanging still around in the low 200s. On the initials, not a lot to see there. Moving on to yeah, we saw the Kansas City Fed manufacturing index also coming lower. That is what we have seen. So the leading indicators are slowing down. So we need to keep a close eye on it, and because all of that is affecting what's happening in the interest rate sphere, of course, and then per correlation to the dollar. Moving on, the Japanese Tokyo CPI came out much higher than expected, breaking the 3% line, coming in year on year on at 3.4. The headline CPI 3.5. Kuroda is still not seeing this as long-lasting. I'll come to his speech a little bit later, but he is saying that it's all temporary and that he does not expect the global Japanese CPI to stay sustainably above 2%. And then we had Aussie PPI coming in a little bit higher than expected, but no big surprises there. BOJ then. So where there was like this slim chance of seeing a bit of a discussion surrounding YCC, everything got brushed off the table. YCC is there to stay. They haven't changed anything. They revised the inflation outlook higher, though, but revised growth a bit lower. That's a global situation. Every economic report around the globe is showing exactly the same. So absolutely no surprises there. Everything baseline. We had a bit of a yo-yo. Dollar yen shot up at first about 30, 40 points, but then got smacked 80 points lower. Perhaps some gentle calls to friends from the Bank of Japan, checking where rates were, but then we completely quieted down in the Asian session around 146.5 in the dollar yen, and yen process stayed very, very quiet. And only this morning, after Kuroda's speech, the dollar yen and yen pairs started to take off again. So what Kuroda was saying, that basically everything isn't changed. They continue to ease in monetary policy. Then a bit of a line. It won't be right to explain the dollar strength only on interest rate differentials. Other factors are at play as well. And he says the CPI will undershoot from next year on. So he's not expecting to hike rates or exit easy monetary policy anytime soon. And then the line that was really doing everything is that he says he does not think that YCC is causing a weak yen. And I think that's what people are really thinking above anything else, is that his YCC and his interest rate differentials are causing most of these moves. We know that other stuff is at play. Negative current account, negative trade balance, but let's be serious. YCC is contributing to the yen weakness. So that was it. Then we had Swedish GDP coming in a little bit better as well, and then we saw the French GDP coming in line, but then the German GDP overshot. A bit in line with what happened yesterday in the Americas. The third quarter GDPs are not as bad as what people may have expected or projected. Of course, we are already well into Q4, so that can change very rapidly. And I would say we may expect a bit of change there. CPI is coming out in Euroland, French CPI higher, all driven by energy shortages and food prices shooting higher. So that is still very high. The Spanish GDP undershot a little bit, but they have been like moving higher faster than other countries. So perhaps we can explain a little bit of give back there. Italian CPIs though shooting up in the clouds, and we're expecting the German CPI to come out later. Expected to be higher. All the lender this morning, we have all those lender throwing in their own CPIs before we get the global German CPI, and they're all higher again. Some of the lender are topping 11% this morning. Let me have a quick look at the Hesse was just below 10, Baden-Württemberg around 10. But then we had, I think, I'm pretty sure I saw a couple of them going into the 11% mark. So don't be surprised if the German CPI comes in higher as well later on. We also had the business climate out in the Eurozone, still very negative, and all the revisions in the business climate were negative. So that for what came out on the data front and what happened on the CB central bank side. We had a couple of other comments coming out and a couple of other things happening, moving relatively quickly over them. We had the PBOC in China fixing the rate a bit higher, 7.1698, but at the same time injecting 90 billion yuan via the 7-day reverse repo. So they continue to inject a bit of liquidity. And then we just a few minutes ago, we had the Chinese regulator coming out saying that commercial banks bought $8.2 billion worth in September of foreign exchange, and the total January to September stands at a pretty $118.5 billion. So that's already quite a lofty amount. I mean, it's no surprise. We have seen the moves in dollar China, whether it be onshore or offshore. There's no surprise in there. The people are buying forex, and that is not going to go very well with what China want to do for the rest of the world and make Chinese yuan more of a reserve currency. I don't think they're there yet. We can safely say. We had a bit of comment out by Yellen as well, saying that the economy is strong, but we are seeing a healthy slowdown, and the inflation is still unacceptably high. So she's still supporting what her buddy Powell is doing right now. So there's no change there, basically on what Yellen says in regards to what's happening in the monetary world. And last comment, I've also seen that Sunak is exploring the idea of raising taxes and cutting spending to the up to 50 billion sterling worth. It's a bit surprising somewhere that the sterling hasn't found a little bit of support on the back of it, but then everything that he will do will be a double-edged sword, in my opinion, because raising taxes and cutting spending is good for the fiscality of a country, but it slows down the rest of the economy, and it's not very attractive for businesses to invest in a country where there's austerity going on. So it's a double-edged sword. But anyway, sterling hasn't found any support from it. And we are trading low 115s right now. We're trading well in the 116s yesterday, and now we are coming onto the support here around 115, the figure. Last but not least, France and Germany are ready to retaliate against the US state subsidy plans, unfair competition deriving from it. So they are disagreeing on a lot of things internally, France and Germany, but for what is the outside world is concerned, they're still trying to put up a concerted effort into trying to handle their external affairs. So that's it for what's happened overnight and this morning. quick look at what's still coming. We do have the, as I said, the German CPI need to hit a little bit later. And then we have the core PCE prices coming out, the PCE as well, personal income. Those are things that the Fed is really watching. So keep an eye on those. Those could really be a bit of a market mover to close the week. And then we've got the Michigan as well. Usually what the people will probably look at it mostly will be the inflation expectations. They have been coming off slightly on the longer end, but the short end has not really shown, apart from one dip, has not really yet shown a big decline. So keep an eye on those inflation expectations. They should be the kicker of what's coming out of the Michigan if we see a lot of moves. Before, well, actually, I'm going to move over to the charts, but before we really look into the pictures, a bit of a warning on what's going on. We are really in the end of month, and expect to see unexpected moves deriving from it, especially as we have seen in the yields market this month, in the equity markets this month. We've seen quite a few swings, and people, asset managers, money managers, FX neutral funds, they will have stuff to do. But it's been such a yo-yo that it can change from one day to another. So keep an eye on those. For the European money managers, keep an eye on the morning fixings, especially the 11 and 12 o'clock London, which is 10, 11 o'clock GMT fixings. They could see a bit of flows. So as I said, expect the unexpected as it stands. But really, it's something that can be overthrown in one move. As it stands, we could still be seeing a little bit of dollar selling, but looking at the European equities, who have overperformed the US equities, I'm not sure whether we're going to see any real euro buying in the end of the month. So I'd be a bit cautious on the euro. But as we always say, if you don't have a position and if you watch those fixings, if they bring stuff to your level, it might be a decent opportunity to put something on. But bear in mind, we still have big central banks to come next week. So for me, at least, I'm not doing a lot. I'm not doing a lot in the more medium term. As I was saying, I really want to wait for the FOMC at least to see if the dollar can take a decisive direction post FOMC. So this is to show the color bands. Sorap are just really the Fibonacci, and every level, every band has for every jump from one into the other level has a different color. I never bothered to put it on a white background, but they don't mean a lot, to be fair with you, just to show where the different zones are. So the euro yesterday, on Tuesday, we broke out when the US rates were coming off, and yesterday after the ECB, we've just undone the whole thing. We we went back under 99.45, but the trend line, the channel break is still holding for now, because this trend line is coming lower. Yesterday, earlier this week, it was bang on the 99.45, broken, retested, and then shot higher. Now it's coming in a little bit lower, around 20.25, and that is still holding for now. So I'd say respect that level for as long as it holds. People not liking the dollar, we may try to buy a few of this 1.5 zone in the euro dollar. See what happens a bit later. and especially once perhaps once month end and FOMC is done. Really, to me, I'm not taking any longer term positions right now. I rather job inside ranges. Short term steps is what I am planning to do if I do anything. Moving over to the dollar yen. So we had the let me go on a slightly shorter term. So we had this earlier this week on the dollar setback. Actually, yesterday early morning, we had this breakdown sub the channel, sub the other trendline support, but it got like severely rejected. I think it had to do with month-end Japanese flows, because it happened at the end of their session, what I already said. And since then, we are holding this trend line again. Bit of a yo-yo, wishy-washy after the Bank of Japan. Went down to test this 146, went even a slightly below, but it's holding. And now after Kuroda especially, we have taken off again, and we are trading in the 147.75 zone. The one thing, I think the yen has still big problems. I'm a bit short yen, and I like to be short yen, but be very mindful of possible interventions as well. So it's shorter term stuff. And I will keep a special eye. We've seen the low of the day is 146. We have Friday, you know what happened last Friday. At 250, 300 points, that would bring us somewhere around here in the 148.5, 149 zone. Be careful about that, because Kuroda has already repeatedly said that 200 to 300 points moves in a day are too much of volatility. So if ever we would move another 100 points higher from here in dollar yen, I'd start to be a bit careful for a possible late Friday intervention. So just bear it in mind. I'm not saying it will happen. It's just a possibility, because Kuroda has hinted at it. And the officials are still coming out regularly. We had Kishida a few minutes ago saying that they could, that they are watching the markets carefully and watching for speculative moves. Moving over to the rates quickly, we've seen the US rates, they have broken through the channel. We could argue that we could put another, that's not what I wanted to do. We could argue that there could be a lower one as well. But we've come to rest on the 390 support, and now we are trading back, retesting the top line at 4%. We are actually moving a little bit above 4%, so that should keep a small bit in the dollar, I reckon. If we get back in it and push back higher, the dollar should find support. This being said, I think we are going to go into the FOMC around this 4%. That's my base case for now. I don't see too much reason, especially not coming from the earnings, that we see for dollar rates to start to shoot higher again in the immediate or ahead of the FOMC. So to me, base case is we go into the FOMC around 4%. Okay, moving at a little bit of other stuff. Cable. Quick look at the cable. As I said, end of month territory. Sometimes the cable is a bit volatile. We've come to test the 115. We've broken earlier back below 115.60. And yesterday we were trading around those 116.5 prior top and bottom. It's really every 50 to 100 points there is some interest apparently. To me, as I was saying, the big level will still be 117.60. Okay, the trend line may be coming in a little bit lower, but to me, I've always been respecting this 117.50-60. A lot of traffic always around this level. So to me, that's the make or break level for the cable. The 113.25 that we shared earlier in the week broke, and is for now we are not even near. The trend line in itself is coming a bit lower, down to 112.80, so bear that in mind. But I would still have a close look at this 113.25 if ever we come back and we test it, perhaps post FOMC, and the day after we see Bank of England next week. So sterling is going to be on the move. For now, I'd say trade ranges and don't bother too much about having a longer term position. What else? Aussie broken, which could still be a flag, but okay, we broke it above and then broke back below, can't hold it, and now we are back on this prior figure 10, 64 figure 10 level, where there was a bit of traffic before. So keep an eye on that going into the weekend. If it holds, we could see a bit of a rebound back up to this 64, 50, 60 perhaps. And then the rest really is end of month flows. This afternoon, 4 p.m. London fix could be another one. Taking the market to levels where it could be seen as a little bit uncomfortable. But if we get back down to the 63.5, it may be worth having a look at this. It's a bit in the middle of the range now, in the middle of the channel, but I would be surprised if you really break down under there ahead of the weekend and into the FOMC next week. Sorry. Kiwi, similar pattern, although, so we could still talk about flags here. It's trying. We are below the 58 level, and I think that's going to be kind of important going into the afternoon, whether we get a close above or below going into the weekend. Stay below, that should be bad news for the Kiwi, in my opinion. It's a bit strange because there's not too much justifying this move lower, especially in the Kiwi. Although if we look at the antipodians, who are very much trading on the back of commodity currencies, and perhaps what's happening in China as well, the commodities are lower today, so that may explain why antipodians are a bit weaker than the rest, because we have seen Euro Kiwi, for instance, which did a nice move lower over the course of the week, really shot up today. And we are seeing exactly the same in the Euro Aussie. We had this rejection around those 157 levels, and then every bounce got sold pretty hard. And then today, all of a sudden, we are trading around this 154 level, and we are trading around 155.5 as it stands. So even above. No, around 155.20, sorry. So I think most of it is to be attributed to end of month flows. Respect them, but as I said, they could sometimes give decent levels to do stuff. So keep your levels at hand, set them a little bit wider perhaps, but they could give pretty decent entry levels if end of month flows. Sorry, I'll get there. Take it to one side or another a bit further than what should be reasonably expected. Metals, silver, as I was already showing in the flags, in the channels. Again, it rejected 1975 on the silver. And now we are back somewhere mid-range. It's a bit weaker. All the metals are a bit weaker today. Again, gold is trading sub 1650. Perhaps as well some end of month shenanigans in there. I wasn't sure about it until the last couple of months, but we have seen some month-end flows in the metals as well. Looks like Fibonacci bands. Chris, what are you hinting at? Yeah, I wouldn't rule out a move back sub 19, but if those are month-end flows, I think I'm going to try catch a little bit of a knife here. Chris, what are you meaning with the Fibonacci bands? Oh, yeah, okay. Okay. Gold, apart from the spike here that we've seen earlier in the month, it seems to be respecting this this trend line. This one is getting watered down, but I still would have a look at 1640 to see if we can hold here or not. If not, ahead of the weekend, why not revisit somewhere close to the double bottom that we've seen here. It's not a double, I don't mean a double bottom chart-wise or tech-wise, I just mean a double bottom by the price action, okay? If it would be a double bottom, I guess we have to get a close above 1680, 88, 80, 85, and then start to move higher again. So cautious there as well. And then quick look at what happened in the MEX, because that was relatively interesting. Dollar MEX not so much, but I'll come to the Euro MEX a little bit later. So this one is still doing its yo-yo, but which was interesting, where the American continent, let's put it that way, got a little bit hammered versus the weaker ones earlier in the week. MEX didn't hold anything, and we had a peak above 20, back above 20 then yesterday, and today we are already trading well lower again. We went down to the 1981, which is a bit of a support, but we are holding well below 20, so that could be interesting, and I think it could be interesting, getting very interesting on FOMC, this one. Very interesting on FOMC, because the MEX is holding pretty well, and it's a bit, it has replaced in some, to a certain extent, China a bit as the US manufacturer. And if the market takes it as such, if the FOMC, if the FOMC comes in a little bit more dovish than just being on autopilot with higher rates, this one could be really an interesting one, especially if he starts to go below 1970s, 60s. It's not too far. It's a 1.5% away in the EM sphere. That could be really done very quickly. Let me first show your the Euromex. We had this spike, as I said, the weak currencies in for a vengeance earlier this week, but then we overshot this 2010 a little bit, never reached my really interesting zones, but we just collapsed the whole way back again, and we are trading already back sub 1980 today. So I was a bit surprised by the move, couldn't really add on, but this move reinforces my idea that I'll try to add on any spikes, especially now the ECB over. I really think I'm going to add on any spikes closer to 20. I don't even know if I'm going to wait 20 for to be honest. And then last one for the day, dollar China. As I said, we had those two intervention legs, but then PBOC injects money, and the spike low held around where they fix the dollar CNY. So this is one that I always keep in mind. Where do they fix the dollar CNY? And if the dollar CNH is starting to go below and hold below, that means that the speculators are starting to get out of positions. Not happening right now. So I think we are still firmly in an uptrend. The only one that I showed here is the longer term channel, and those targets around 744. Keep those in mind, okay? And unless you guys have any really specific questions, we are going to end it here for the week. Dollar rand. Oh yeah, okay. All right, check. Dollar rand. Yeah. What happened on the dollar rand is dollar move on the one hand, and the second thing that happened, in my opinion, Chuck, and I spoke about that in our chat rooms. If you want to know more about what we are doing, join our community. There's really a lot of very interesting people in there, very good ideas floating around, very good trade setups, very and just very nice people to have a chat with when the markets are quiet. We learn a lot from each other and we help each other a lot. So what happens in the dollar rand? So we broke through the channel here pretty violently when the US yields were dropping severely, right? From when we're dropping from 4.30 to 4% in the tens. And when I said as well, the weaker currencies took some revenge on the strong one and on the dollar block earlier this week. So the text plus what happened there is explain this, and also we've seen what we've seen, I think, in the emerging markets sphere. There's a lot of rebalancing and a lot of positioning one emerging market currency versus another. So, and what I think that also happened, but you won't hear it anywhere else in the market, or you won't hear it only when people really mention it somewhere. But having been for 35, 36 years in banks, I know what people are doing, and there is cross-currency emerging market going on. And I think what happened there is partially to be explained by what happened in the Mexican peso. Mexican peso being part of the Americas bloc, it had a lot of strength versus the rest of the emerging markets as well. So if you don't want to be paying up, being short for rand, for instance, because it's a high yielder, you can actually reduce or actually get money, I think. Yeah, I'm pretty sure. If you're long MEX, short rand, for instance. And I think that violent move is part of a rebalancing from MEX ZAR longs into a more neutral position. And that's let me go back on the shorter end. And that's if you see, that's this spike here in dollar MEX. I'm not saying it should not have happened, but I think it is part of what we are seeing in the emerging market sphere. Sometimes the rebalancing of the books, and I think that has been part of the MEX the rand move. Sorry, I hope that's been clear. So in the short term, watch this. Watch this 18 and a quarter. We're back above 18.15. I was watching this 18.06 zone. We're back above. So keep an eye on 18 and a quarter if it goes back up there and can re-enter the channel. But again, I'd say wait for the FOMC. Really, well, that's what I would do. We're having a bit of a level here, exactly there as well, not only the channel, but also a bit of a horizontal level there. So that's for the rand. And if there's no other questions, I am going to thank everybody for their presence this week again over the Flow Show. I hope we can help you a little bit to understand what's going on in the markets, and trade safely out there. We are in end of month territory, so really taking into account, things can move very, very strangely. So trade safe and have a stellar weekend. We talk to each other next week again. Thank you, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.